Let's get back to the municipal market. We are at BAM Mutual offices down in Lower Manhattan, Build America Mutual, talking about the municipal bond industry. Tom Doe joins us of Municipal Markets Analytics. Municipal bond market, it's an active market. Talk to us about 2024 in terms of new issuance, Tom, and kind of what you guys think about 2025.
Well, there was record issuance, as you point out, in 2024. Tremendous access to the market. We think there's going to be continued high issuance going forward. We actually think that in the next 10 years that we'll see municipal issuance reach $1 trillion a year versus $500 billion last year.
Whoa, and the buyers are all there.
Yes, and it's predominantly individuals through funds, ETFs, and in direct purchases.
Some of the Trump administration, President Trump himself, is saying that perhaps as it relates to infrastructure spending, maybe even disaster relief spending, that some of the spending should be more at the state and local level versus the federal level. How does your market think about that?
I couldn't agree more with that perspective. In fact, a year ago, almost to the day, I testified before the Senate Budget Committee and made those points. Senator Braun from Indiana, who is now governor in Indiana, championed that. I think that the states and local governments have the capacity, debt capacity, to take on, can take on more, and it's right for them to have that local oversight for disaster relief. So I think it's a win-win. I think that we have more control at the state and local level. The federal government takes some of that responsibility off their books. So I think it's a real opportunity actually for the municipal industry. What Trump was saying in Project 2025 for regarding FEMA.
What other issues out of D.C. or headlines out of D.C. are you guys in the muni market monitoring this year?
Well, the municipal market is kind of a fear-based market because everybody's looking. The exemption drives everything, and so there's a great.
As in, like that might go away, and then therefore.
Exactly, and so everyone thinks, oh my God, from a mutual fund manager, you'll be talking to some later today, and they go, my God, if it's not a tax-exempt market, well, what do we do with our business? I think. And who knows how to handicap that? I mean, the market's been around for 100-plus years. I think low default rates because it's retail dominated. I always remember back in 2008 that Barney Frank, during the financial crisis, said the problem was the disconnect between the borrower and the lender. And I think that's what the municipal market actually has, is that close connection because of the exemption. So there's some limitations the exemption presents, but it also creates that better oversight. And as a result, low default rates and a very attractive investment.
States, municipalities, I've been told in the municipal bond market, they issue the money when they need it, not when maybe it's smartest to raise it, like when rates are low. If they have to build a bridge or something like that, or a road, that's when they issue the bond. Is that still kind of how it works?
I think you're right. I mean, it's not a very forward-looking market. But to your point, the federal government also doesn't often borrow when rates are low, too, right? So it's not just the state and locals. So I think what I'd like to see, certainly in wake of Los Angeles and the wildfires and the hurricanes in North Carolina we all know about, is that we could have more climate adaptation type of projects. So better infrastructure for flood control, water and sewer, management of wildfires, these types of things, I think are opportunities for the municipal industry to really step forward and start pushing some of these projects.
Dumb that down for me for a second. So does that mean that then you would issue bonds that would be tax exempt, that then you'd use that for disaster prevention?
Well, sure, because in that, so let's say we know the storms, rainstorms, we see more rain, they're more frequent, and they're overwhelming existing infrastructure. So really, what I'm saying is just saying the forward looking is being more attentive to upgrading antiquated infrastructure that we know, the lead pipes and all this type of thing that are around. But I'm very interested in the flood and the water and sewer aspect, because I think that it impacts economies. It's important also on utilities to upgrade those. We've seen those with the wildfires, right? The sparks, and whether it's Hawaii or California. So I think that's the opportunity for the industry to say, well, this is a way to upgrade infrastructure, and now to reduce the potential future costs of the federal government through FEMA.
What are some of the sectors that you think will be active issuers in the coming year or two or three?
Well, as I just mentioned, again, I come back. I'm on a drumbeat here. Right?
How about education? Because I'm not sure. That used to be, I felt like a good active area, but I'm not sure anymore.
Well, everyone likes to build schools, right?
Yeah.
They're politically attractive, and it's always about the children, right? So everyone likes to do those, and that's a high percentage of municipal issuance is tied to schools, secondary and elementary and all that. So I think you'll see continue that. I again, coming back to a theme that I think is really focused is, changing weather, increased heat. You've got to improve HVAC systems in these schools in Arizona and all this. And so that's another area of financing. There was in Montana, there was financing for airplanes to fight wildfires.
Yep.
It's an airplane deal.
Yeah, interesting. Yeah, we saw them in L.A. certainly.
Yeah, absolutely.
What about SALT deductions? Like we're like super into looking at those. Obviously, living in Jersey and New York, how does that influence or change or impact the muni market?
Quite frank, muni market not so much.
Okay.
Really, I mean, it's more of our personal interest, right? Yours and mine of having that. So.
But so no changes in terms of the demand for municipal bonds, or okay.
No, I mean it's on the margin type of a thing.
See.
Oh,
municipal bonds, I'm telling you, it's a thing.
It is a thing.
I'm telling you. I'm a big fan of the municipal bond market.
I think they're great. It's fun. It's a lot of gray area, so it makes it interesting as well, right?
And
it's political,
of course,
emotional.
City gets out of the municipal bond underwriting business. Great strategy.
Yeah, it's
City,
not so
I mean,
good.
you've got to be kidding me.
What a
Anyway,
mistake, right?
thing.
Huge
Terrible,
mistake.
terrible. Tom Doe, founder and CEO of Municipal Market Analytics, joining us here talking about the municipal bond market. It is a big market, active market, deep market, and Build America Mutual plays a big role in that because they insure a lot of municipal bonds, which gives investors added security and things like that. So we keep an eye on that.